All right, let's jump right in. We talk so much about how to invest our money, right? But what if I told you that one of the smartest things you can do is to not invest a chunk of it? I know, it sounds completely backward, but a truly great investment strategy isn't just about offense. It's about knowing when to hold back. Today, we're going to break down a powerful tool that most people just completely miss, the strategic reserve. And to really get our heads in the game, let's start with this quote from Napoleon Bonaparte. It says, "Strategy is the art of using time and space." And that's exactly what this is all about. See, investing isn't some mad dash for returns. It's a long-term strategic campaign. It's all about putting yourself in the right position so you can strike when the time is perfect. Because trust me, that moment will come. The market takes a terrifying nosedive, the headlines are screaming doom and gloom, and your portfolio is just bleeding red. So in that moment, what do? Do you panic? Do you sell everything? Or do you see a once-in-a-decade opportunity staring you right in the face? Well, your answer to that question completely depends on whether you've prepared for this exact scenario. So here's our game plan for today. We're going to start with why you even need a strategic reserve. Then we'll cover what it is, how to build it, and just as important, where to keep it. And we'll wrap it all up by showing you how this whole strategy puts you in the driver's seat. Okay, first things first. Why even bother with this? Well, it all comes down to the psychology of investing. This is the secret to staying cool, calm, and collected when it feels like the whole world is falling apart. Just look at the two paths an investor can take. On one side, you've got the panicked investor. They're 100% invested all in. So when the market crashes, they have zero room to breathe, no margin for error. They're forced to just watch their wealth evaporate, or even worse, they get scared and sell at the absolute bottom. But the strategic investor, the one with a reserve, oh, they're calm. They've got cash on the sidelines, which means they can actually go shopping when everyone else is desperately selling. And this really gets to the core of it. Your strategic reserve, its job isn't to make you money day to day. It's not an investment designed for growth. It's a shield. It's your financial armor. Its sole purpose is to give you resilience, that psychological security, and frankly, the firepower to act instead of just reacting. Okay, so what is this thing exactly? Let's get a really clear definition so we know what we're talking about. This is your financial ammunition. So a strategic reserve is just a sum of money that you have deliberately, and that's the key word, deliberately kept out of the market. This isn't just cash you forgot about. No, it's waiting for a very specific mission. The source material uses this fantastic metaphor. Think of it as your ammunition, just waiting to be deployed when those incredible opportunities appear during a crisis. Now, I can already hear some of you screaming, but what about opportunity cost? And you're absolutely right. By keeping this cash on the side, you are technically missing out on potential gains if the market keeps going up. But here's the crucial point. This is a deliberate, accepted trade-off. You are consciously trading away small, potential gains for immense security and the power to act decisively when it matters most. It's a trade worth making. All right, so we get the why and the what. Now let's get practical. How big should this reserve actually be? And how in the world do you build it? Let's just walk through a quick and easy scenario from the source. Imagine you start out with a portfolio that's worth 10,000 euros. And then, bam, a massive crisis hits, something like the 2008 crash, and the market absolutely plummets by 50%. Your portfolio's value just got sliced in half. It's now worth only 5,000 euros. And look, that's a painful moment. For most people, this is where pure panic sets in. But not for you, because you have your strategic reserve. In this scenario, if you had 5,000 euros in reserve, you could pour it into the market right at the bottom. You wouldn't just get to ride the massive rebound on all that new money, you'd also supercharge the recovery of your original investment. You literally turn the crisis into your single greatest advantage. So based on that kind of logic, the source gives us a really simple rule of thumb. A good goal is to have your strategic reserve be about 30% of your total portfolio value. That gives you a really significant amount of that ammunition we were talking about. And of course, a quick but really important disclaimer here. This is the simplified model, folks. It's meant to be a guide, a way to help you think about sizing your own reserve. It's not, and it can never be, a guarantee of future results. Every situation is different. So how do you actually build it? Honestly, it's surprisingly simple. If you're investing a certain amount each month, just apply the 70-30 rule.
For every $100 you plan to invest, put 30 of it into your strategic reserve account and invest the other 70. That's it. You'll build up your investment portfolio and your ammunition at the exact same time.
We're almost there. We've got the why, the what, and the how. But this last piece of the puzzle is critical. Where do you actually keep this money? It needs to be safe, but it also has to be ready to go at a moment's notice. This breaks down 3 really solid options. First up, you've got your basic high-yield savings account. The huge advantage is your money is guaranteed and you can get it instantly. The downside? The interest you earn is pretty low. Second, you could use a guaranteed fund inside a life insurance wrapper. This usually gives you a better yield, but be careful, getting your money out could take a few days or even weeks. And finally, there are money market funds or short-term bonds. These can offer an even higher yield, but they do come with a tiny bit of risk and some tax implications. The key is to pick the one that matches how fast you need the money and your own comfort with risk. And that brings us to the big finale. You see, all of this, the definitions, the rules of thumb, the different accounts, it all leads to one incredibly powerful shift in your mindset. You are no longer just a passenger on the market's wild roller coaster. You're the one in control. You lead the dance.
So let's boil this all down. What are the key things you absolutely have to remember from all this?
Here's the cheat sheet. Your strategic reserve is simply uninvested cash ready for action. A great target to aim for is about 30% of your total portfolio. Its one and only purpose, to let you buy when everyone else is selling in a panic. The benefits are huge. You get the psychological security to stay calm and the financial power to make moves. And you can keep it in a safe, liquid place like a high-yield savings account or a money market fund. Simple as that. And I want to leave you with this final, powerful thought from the source material. It says, it is you who leads the dance. Not the markets, not the panic, you. I mean, that's what it's all about, isn't it? That's the ultimate goal. Look, when you build a strategic reserve, you're not just preparing for a crash. You're preparing to turn that crash into your greatest triumph. So the only question left to ask is, are you ready to lead the dance?